welcome back to NDTV Profit. It's now time to focus on the new boy on the block, which is Unicommerce eSolutions, which listed on the bourses today. Now, stellar debut listed at 118% premium to its IPO price, and we spoke to the management earlier today. Listen into how the company plans their growth plans forward.
Sure. So the market that we are in, we are enabling e-commerce. We are an e-commerce enablement SaaS platform. The overall market, there is a huge potential for this, because if you look at the current e-commerce shipments that happen in India, there's about 4 to 4.5 billion shipments that happen every year. Compared to that, in China, there were 150 billion shipments that were processed last year. So there is a significant headroom for growth. There are a lot of businesses that are coming online. Our vision is to become a one-stop shop for e-commerce enablement. As a result of that, we continue to launch new products, and we'll continue to launch new products to cater to various spaces. So there is a significant headroom for growth in terms of the number of transactions being processed, given that our revenue is linked to the number of transactions, plus new products that we aim to bring to the ecosystem.
Right. Also, talking about the offer proceeds, all these offer proceeds will be received by the selling shareholder and none will come to the company. So can you give us some kind of color over here?
Sure. So this was a full offer for sale, and there are only two selling shareholders: SoftBank, which is a private equity investor in the company, and the holding company, which is Ace Vector. SoftBank has offloaded about half its stake, and to make up for the statutory minimum of 25% float, the holding company sold the remaining 9 to 10%. The company, actually, Unicommerce, is sitting on a decent amount of cash. As of March 2024, we had 69 crores of cash on the balance sheet, and we are adding cash every quarter onto the balance sheet. So the cash position is continuing to strengthen. Given it is a business that doesn't require a lot of incremental growth in cost as the revenue scales, so there is free cash flow generation. Also, our profits have been expanding, which are increasing the cash on the balance sheet. Last year, our PAT doubled year on year. And finally, this is a business with high operating leverage. So over time, as revenues grow, even going forward, we intend to add more cash on the balance sheet, which we will then use going into the future to both grow the business organically and inorganically.
Okay. Right. So, talking about the cash which you mentioned that you will get and then likely invest into the business, what kind of margins are you looking at in terms of, say, FY25 going ahead, if not a quarterly perspective? I know it would be difficult to call out the near term, but along the FY25, what kind of margin do you expect going ahead?
So look, if you were to just zoom out a little bit, what is Unicommerce? Unicommerce is essentially an index to the e-commerce market. Whereas e-commerce volumes grow in India, we anticipate our business will also grow. Historically, we've grown faster than the e-commerce market, and the goal would be to continue to do that in the future. For instance, last year, the e-commerce shipments in India probably grew at 8 to 10%. We grew our revenues at 15% plus. And the goal would be that as e-commerce grows at a 25% CAGR on an ongoing basis over the next few years in the medium term, we should continue to beat that e-commerce shipment growth. And the reason why I mentioned we are an index to the e-commerce market is because our pricing model is on a per shipment basis. So as shipments grow, our revenues grow. Obviously, we are continuing to enhance our products and launch new products to add more value to the growing complexity of the e-commerce, of running an e-commerce operation in our country for a brand.
Right. So talking about your business model, you mentioned it is on a per user basis or a per transaction basis. So do you have any upfront money coming in, or is it just transactional based?
So our enterprise customers, which constitute nearly 90% of our revenues, pay us a minimum subscription fees each month, in which we bundle certain number of transactions in this cost, and once they exhaust this quota of the transactions allotted to them, any additional transactions that they process, they pay us for that. So it is linked to the number of transactions or items, and it is actually linked to the number of items that are there. So if an order has 2 items, we charge double on that order. So as the number of items keep on increasing, as Kunal mentioned, our revenue will increase further. But we charge a minimum subscription fees and a usage-based fees, but both are linked to the number of transactions being processed.